What's up, y'all? It is Bella, back testing with Bella. I would like to say Happy New Year to everyone. I hope that you guys have a blessed and prosperous new year coming up. Have no stress, getting better at charts, doing what you need to do to become a profitable trader in 2023, and just letting those old habits go. So today for the new year, I'm going to show y'all a strategy that you can take into 2023 with you. This strategy will be strictly looking at the 1 hour time frame using breaking structure, entries, and exits in the market. So I'm looking at US 30 right now. I'll go ahead and clear my chart and I'm going to get into replay mode. Say I'm getting into replay mode from here. So the way how I go about this is I'm going to text in here. I use break of structures. So this can be like a scalping method, day trading in the market. So break of structures is basically breaking a swing low or a swing high. So the way how I would do my risk to reward ratio is 1 to 3. So that is my risk to reward ratio. I did make a video about that. So you guys can definitely go and check out that video on risk to reward ratios. Now I did do an option style, but the same could apply for Forex. So breaker structures, breaking through a swing low or swing high. Also, I'm going to add using the 1 hour. I'm sorry about that. 1 hour time frame. So, by the way, I do think that this year will be pretty bearish. So, I'm not too hyped on going long in the market. So, getting into it here. So, possible entries. This is just adding in swing lows and swing highs. So, from here up here, this is the highest swing high, which I'll mark this here. And then down here is the swing low. Another thing, the great thing about this strategy is that you can set alerts. Using TradingView. So you don't have to look at the charts all day. So the great thing about this strategy is that you can set alerts. You do not have to look at the chart all day. So this is just a simple scalping strategy, but you know what I'm saying? You don't have to look at the charts all day. So you can potentially enter at the swing high or you can potentially enter at the swing low. So this is trading breakouts. So this will be a breaker structure. So basically breaking through a previous swing high or breaking through a previous swing low. So at this swing low can be a possible entry and at this swing high can be a possible entry. All right, so getting into this strategy, I want to mark off a couple of rules. So for this breakout rule, the candlestick must trade and close below to be sure the trade will go in your direction. All right, so this is the rule. For this breaker structure, breaking through a swing low or swing high, the candlestick must trade and close below to be sure the trade is going to go in your direction. So swing low all the way down at 33,880. And I know some people may be like, well, this is like, oh, it's too late of an entry. This is not to be perfect. This is basically you're catching breakouts in the market. This is no trading in between. So stay patient here. I need you guys to follow along. And by the way, if you haven't already and you're new to my channel, please like, comment, and subscribe. Thank you. So you can see here, the market has just created a new pivot low here, which can be another swing low possible entry. But remember the rule, it must go below and close below. So let's see. Even from here, before I go ahead, the market has also created a new pivot high. So this can be another breakout here. So if it was to go above 34,193, it actually close above, then okay, I'll hop in for some buys. But if it goes below the swing low possible entry, I'll hop in for some sells. So I'm going to make a note here. I'm going to add swing high possible entry. So these are all breaker structures because they are breaking through swing highs and swing lows in the market. Okay, it didn't go above. It didn't close above, actually. All right, so now it has closed above. So this is entry. I will have my targets set towards to fill this fair value gap. So my first target will be up here. So let's just say I'll have a target here. I didn't mean to put text. This is my target one. Clone this, and then this up here, full fair value gap fill, would be my target number 2. So the reason why target 1 is there is because it can possibly reject from target 1 from a hourly bearish fair value gap. So just to add a note there. So that is the reason why that is my target and not the full fair value gap. So gonna go ahead and let's say I'm entering at this breakout. I will have my stop loss just at this swing low to go up here. All right, so it did go a bit below my target, but it never closed below. So if it had closed below my stop loss, then the trade would have been cut. But because it didn't close below, then the trade was still possibly valid. In this case, you guys see that it did go up. So now from here, I'm going to go ahead and clear all of this off my chart. I'm just going to clear these lines off my chart and do another example. All right, so now I'm looking for new swing highs and new swing lows in the market. So here is a swing high. here is the newest swing low in the market. So here's the newest swing low in the market. So if it was to go above or below one of the targets, that would be the way how I would be entering into the market. All right, so from here at this point is another swing low, which was a break of structure. And it actually closed below. So you guys can see that it actually closed below this time. So from here, this will be an entry for me. Let's add a note in here. Entry. Now where I had my swing low, this will be a target. So this here is a target area. My stop loss would be just above the swing high in the market. So swing high is up here. This will be my stop loss. So I'm going to go ahead, enter, and for shorts, let's just say I'll add another target too of a swing low. I do see another point. Let's add another target here. Swing low. So it is kind of bouncing here in this area, which it is bouncing from a 4-hour fair value gap. But that is a whole nother topic for another day. Right now, I am just talking about breakouts in the market. So entering from 33,832, and it went to a low of 33,649. So pretty much $200 down, which is a cool trade on US 30. So it is kind of bouncing, but I do have a second target towards 33,557. But let's just say here you should have taken some profits. Alright, so both target points were hit in the market. So this did create a new swing high there. So that would have actually been the stop loss. So your stop loss should always be at the current swing high or swing low. So throughout the day, new swing highs and swing lows are being formed all day. So you're going to have to adjust your trade if you have to, which is perfectly fine. So that is how you can trade breaker structures, breakouts in the market, and be a profitable trader. If you guys have any questions, please feel free to ask me in my Discord or comment below. If you like this video, please like, comment, and subscribe. Thank you.